Hey everyone, let's talk about Yes Bank today. Back in 2019, when its share price fell from almost 300 rupees to 13, a lot of investors still remained invested and bought even more, hoping that it would soon recover and double their money. Well, it's been more than 3 years now and there are no signs of recovery. So, what investors should do at this point? Is it a valuable buy in 2022? To assess its present situation, we must understand how it all began. So, let's have a quick review of its rise and fall from the beginning. In year 1999, two successful bankers working in separate foreign banks came together and founded an NBFC, Non-Banking Financial Corporation. These two bankers were Mr. Ashok Kapoor and Mr. Harkirat Singh. It is also said that it was Mr. Ashok who recommended the name of Mr. Rana Kapoor and who eventually joined the team as a third co-founder. In 2003, due to certain authoritative disagreements with the foreign investor, Mr. Harkirat Singh left the venture and moved away. In the very next year, 2004, this NBFC acquires the banking license and became Yes Bank. Yes Bank was doing pretty well, going steadily in initial years, but the turning point came after the sad demise of Mr. Ashok Kapoor in Mumbai 26/11 terrorist attacks in 2008. Now, Mr. Rana Kapoor was solely leading the bank, and it is when the problem started to arise in the bank. First battle was a legal battle between Ashok Kapoor's family and Rana Kapoor, since the wife of Mr. Ashok wanted her daughter to be in the board of directors. However, this would have not affected the working of the bank, but second issue was way bigger than this one, and that was Yes Bank's aggressive approach towards giving loans. It started to give loans to the smaller companies or financially stressed companies who were not capable of returning that back or paying that back. Due to this, NPAs, or we call them non-performing assets or bad debts also, so they started to accumulate. And the worst part was, these bad debts were not even reported in the books. Internal audits always showed that the bank was making profit and there was a negligible amount of bad debt. In 2015, UBS, a global financial service company, raised the first red flag about Yes Bank's asset quality. It reported that Yes Bank had loaned more than its own net worth. It was also reported that it has given huge loans to the companies which has very less chances of paying it back. This tampering with the book came in public in 2019 with an RBI audit. It was then reported by the auditor that NPAs were highly underreported and the profits shown over the years have also been manipulated. It was 25th of March 2019 when the share price started to gradually fall from 280, and by September 2019 it had come down to Rs 38. This was the time when ED, Enforcement Directorate, took Rana Kapoor under its surveillance for money laundering charges, and he was ousted from the bank. And then Mr. Ravneet Gill was appointed as a new CEO by RBI. Once Mr. Rana Kapoor had himself said that Yes Bank's share were as precious as diamonds and he was never gonna sell them. But in November 2019, he himself sold his entire stake in Yes Bank in cash market, and resulting because of that, the stock price came down even more. But after all these things, it was a bank after all. Public money was involved. So in March 2020, Finance Minister Mrs. Nirmala Sitharaman had to come up with the reconstruction scheme, under which all the leading banks such as Kotak Mahindra, SBI, Axis along with HDFC were offered Yes Bank stake at 10 rupees per share, so that more capital can be infused in the bank. Due to this action, stock price started to stabilize, and this was a very confusing time for the investors as well, for the retail investors, because of this, people started to regain their faith in the bank and they started to buy even more, thinking that the bank was back on track. But soon after, the big investors, all those banks, Kotak Mahindra, etc., started to sell their stake and dragging down the price even more. By July 2020, the price had come down to Rs 13 per share. Well, this was the rise and fall of Yes Bank. Now the question remains, where are we now? After March 2021, it has shown slight but consistent recovery, and in its net profits, revenue have also grown. EPS has also improved a bit. FIIs and other institutional investors have increased their holding in last quarter. In short, it still has very weak financial, debt is very high, promoters have no holding. So this still is a financially stressed company on the path of recovery, of course. the stock price seems cheap for a lot of investors, and that may be the reason for retail investor to buy this one. But comparing to its book value and other factors, this price, even this stock at this price also, it seems very expensive. So what would I like to do with the stock? Well, I would not suggest to buy this one at this price. For long term at least, this might be of some interest to short term investors or swing traders. But I wouldn't want to take any chances even for short term right now, because I don't see the price moving too far anytime soon. So there is no point to blocking your money, right? So I would not like to buy for 1 or 2 quarters at least. I would like to track this one for 2 quarters, seeing its recovery, how it is going to recover. And I may have other options. I mean, we do have other bank options also, better options in banking sector also, right? So we should not block our money in this one. Well, that's my opinion. Before making any investment decision, please consult your personal financial advisor. Else you can also write your queries to wealthpool.in@gmail.com. If you found the video knowledgeable or interesting in any way, don't forget to subscribe. Happy investing.